Per usual, this video is for educational purposes only and not intended to be financial advice. So I know this is a technical analysis channel, but with the halving right around the corner and the Brexit vote that just occurred, I wanted to talk a little bit about Bitcoin fundamentals and their potential implications on price. And the classic trading adage is fundamentals tell you what to buy, technicals tell you when to buy. And when I think about fundamentals, I think about usefulness, usage and user adoption, supply and demand, growth opportunities, and specifically for cryptocurrency, the dev team. We are talking about programmable money here after all, so if a head developer like Mike Hearn decides to rage quit, which is what happened here in January, that's going to have an effect on price. But one of the most prominent arguments for Bitcoin is that it's a safe haven from fiat currency similar to gold. And we've seen that with the Brexit. So back to this real quick. And I'll link everything I'm talking about in the description below. So even though we had a big fundamental event or news event, we still held within the cloud. Kind of crazy. Like I said here, most importantly, we never broke down from the Kumo. So people were pretty bearish on this, and understandably so. But it held, and here we are today, way higher than Hearn sold. So that's kind of interesting. So back to the halving. It's around the corner, folks. 13 days. I'll explain more about what the halving is in case you don't know. Most of the viewers probably do know. So 13 days happens every 210,000 blocks. I'll go into that. So back to usefulness and usage of Bitcoin. This is kind of the TLDR version that I like the most that I've seen. Basically, Bitcoin is useful because you can send any amount of money. It's cheap to send, it's private, it's secure, it's instant, it's open source. I can read the code, anybody can change the code, hence the programming part of it. You can use it anywhere in the world. It's peer-to-peer. The ledger is public. It's decentralized. And unlike credit cards where you can reverse transactions, you cannot reverse transactions with Bitcoin. So that's all part of the fundamental aspect. This is largely why I'm even involved with Bitcoin at all, because of these fundamentals. So going back to the Brexit stuff, this is some loose evidence that Bitcoin is a safe haven against fiat. This is obviously a snapshot immediately after a big market event. But you can see, unlike the world markets down here, which were all down big time, Bitcoin's right up here with gold. Maybe not percentage-wise, but you get the point. So that's interesting. And when we think about Bitcoin, one of the most attractive parts is the fact that the supply is capped at 21 million. And this is achieved through halving events and mining. So you see that most people in Bitcoin know about this, but when Bitcoin started, there was a fixed reward, and that reward will continue to decrease based upon blocks mined every 210,000 blocks. Okay, and we're nearing the next halving event, which is actually going to be somewhere around July 10th-ish. So we're actually even ahead of this. We're ahead of this 2016 prediction. So back to some inflationary stuff. You can see that right now inflation is still pretty high at 10%. Traditionally, Bitcoiners like to say Bitcoin's deflationary, and it is to an extent. It's definitely there's an inflation rate currently. As we get, past 2037 or 2024, it's more deflationary than inflationary. But this is still better than most of world currencies, fiat currencies. Again, this is a big fundamental reason why a lot of people like Bitcoin, is because supply is fixed, unlike fiat, which could just be printed, as needed, basically. And one of the many reasons why the purchasing power of the dollar is down. I'm not going to get into all of it, but a big part of that, why purchasing power is basically, decimated, more than decimated, but it's dead compared to where we started, is because of quantity problems. So another part of the fundamentals is, Bitcoin fundamentals, is the fee structure. And not only do miners get rewarded with the block reward, they also get rewarded with the fees in the block. So they get the 25 or whatever it is at the time reward plus the fees. So every time you send a Bitcoin amount to any address, you include a fee or you don't include a fee. If you don't include a fee, your transaction is not likely to be sent quickly. The higher the fee, the quicker the priority. So you're incentivized to use a fee that's high enough that the miners will include it in the block. Now, as the reward goes to 0, which it eventually will, as all Bitcoins will be mined by 2024-ish, the idea is that the fee structure takes over and the reward is replaced by the total fees. And the other part of that is the general idea that Bitcoin would increase to a certain value where the fee is appropriate and reasonable for mining costs, etc. So some people may not know this, but on Tradingview you can actually pull up a lot of this stuff. If you just type in here, you can just type in like Bitcoin hash rate, and it'll pop up this quandle thing, and you can just add that to your chart. So that's all I did. I added a few fundamentals, mining fundamentals to the chart. You can see total Bitcoins, hash rate, and difficulty. So like I said, a few more basics. One block contains the ledger of the previous transactions. Blocks are constantly being processed by miners and added to the end of the ledger. This is known as the blockchain. So when you think here of blockchain technology, the process of mining is essentially you're competing to find the answer that solves the current block algorithm, the algorithm for Bitcoin that holds it together. Miners are rewarded for each found block, and that reward, like I said, decreases by half every 210,000 blocks, or about every 4 years. And additionally, miners get the fees that you send with your transaction. So hash rate is the mining power, and that increases with the number of miners or rigs, as well as technological advances such as ASICs. And as hash rate goes up, difficulty also adjusts every 2016 blocks, so that the time to find a block is approximately 10 minutes, and this helps with keeping Bitcoin secure. I'm not going to go into that in this video, but anyway, so yeah. And as hash rate increases or decreases, the difficulty for the algorithm solving will adjust accordingly. And you can see up here, this is the total number of Bitcoins in circulation. And we think about 5% is lost forever just based on people losing private keys to their wallets, or people who had wallets who died, etc. Satoshi's coins, who knows where those are. So anyway, to the implications on price, this was the first halving event in November 2012, November 28th-ish. It was on November 28th. This is November 26th. This is a weekly chart of Bitstamp because they had the most data that I could pull on TradingView. So you can see so I'm trying to compare the last halving to the current halving event, okay? So we had a similar sort of bubble, sideways, and then more buying, and then sideways. So we had if you look at current prices, it looks kind of similar. It's hard to make complete comparisons, but you can clearly see here we have a triangle that we broke out of that triangle into halving, and then went sideways, and then went nuts again. So if you look at where we are now, I don't know why this artifact is on here on Tradingview. It has us going to 10 cents. That's not the case, obviously. So the current halving event is about July 10th, like I said. You can see we're ramping up hash rate. Difficulty is at all-time highs. And we are buying, like we were last time, into hash rate. So it'll be interesting to see if we continue to buy, go sideways at all-time high-ish, and then for a few weeks, and then consolidate and make new highs. That's the general idea. Again, that's what happened last time. You can see we kind of stood at this all-time high level and took off from there. So those are what I think the implications might be. If you have any comments or ideas, or if I explained Bitcoin poorly, leave me a comment below. Thanks for the new subscribers. Thanks for the Reddit Gold on Bitcoin markets. It's much appreciated. You can get a hold of me on Twitter. I'll link everything, like I said. And happy trading. Happy halving day that's coming up. Take care.